Prakash Industries is basically a steel maker. Majority of their revenues comes in from the steel division, but it also has other divisions. So basically, they have steel when 73% of the revenues comes in. Power is 18% and PVC pipes is 9%. But the majority of margins comes in from the power division and PVC. Steel is at low at 4%. So this is basically what the business does. This is basically the Prakash Industry business. Now the current capacity of steel is 1 million ton per annum. By September 2018, there will be the installation of the sixth kiln, which will take the capacity to 1.2 million tons per annum. So they are expanding steadily, slowly and steadily, and that's what they're looking at. Now in terms of, let's look at the valuations and the financial. The market cap of 3,300 crores. Look at the sales. The FY17 sales was 2,400 crores. In the 9 months, they've already done 2,000 crore. So the market cap to sales ratio is pretty much very reasonable. PE of 8 times on an FY19 basis, which is one of the cheapest steel makers, and FY19 EV to EBITDA of 6 times, much cheaper than its peer group. So this is basically the comparison. Now look at what they've done in terms of revenues. The revenues from a 2,200 2281 crore in FY16, they've moved to 2,400 crore, and in the first 9 months they've done almost 2,100 crores. The margins have improved from 9% to 12%, and the first 9-month margins were 18%. And look at the EPS. From a 1.75 in last year, they made it to 5.97. In the first 9 months, they've already done 3 times of what they did last year. So financially, they seem to be doing extremely well. That is what is happening with Prakash. Now, in terms of guidance, what they gave, extremely strong guidance. They're saying that they expect the full capacity utilization from the current 100%, from 80% to 100%. And coal linkages that will come out will help them save almost 100 crores a year. So that was the guidance. Now, in terms of their mining license, they have 2 mines. One of their mines, iron ore mines, will be operational by 2018, and the second mine will be commissioned in 2019. So the backward integration will definitely help Prakash Industries at this point of time. What they're also saying is that the capacity of steel from the current 1.2% that will happen in September, they're looking at 3 million tons per annum in 3 months, and they're looking to double their pipe capacity by September 2019. So that is something that they are extremely bullish on. Apart from it, look at the margin guidance, what they've said. So in the first quarter, it was 17, in the second quarter, 19, the third quarter, 21, and they've said in the fourth quarter, they'll do EBITDA margins of 25%. So that is extremely strong for Prakash Industries. Apart from it, if you're looking at the sales and turnover guidance, in the fourth quarter, they expect a sales growth of 35% and a turnover, the sales volume growth of 35% and a turnover growth of almost 60%. So that's extremely strong guidance that's come in. Now, the problem is that the promoter shareholding has fallen from 46% right up to 40%, 41% currently. So the shareholding has gone down. But if you're looking at what they've done recently, is that the promoters have allotted warrants to themselves. So 1 crore warrants were allotted to promoters at 208 and 12.5 lakhs to non-promoter at 208. And whenever you see when promoter themselves give themselves warrants, pretty much that marks the base for itself. So 208 is an important price that you need to watch out for. The debt trajectory has actually come off from 965 crores just to 580 crores of debt that they have. So the debt trajectory is doing well for Prakash Industries. What works for Prakash Industries? The demerger of their PVC arm, that is something that will work. A QIP of 500 crore is planned so that their base capital improves. The captive iron ore mines aids the backward integration, and they said that they will be debt free in the next 2 years. So that is extremely positive for Prakash Industries. Obviously, some concerns was recently in the SEBI scrutiny that was not well, but they came out of it. Does not pay dividend, and the return ratios are in single digits. So if they start improving operationally, sure, these will also come up. So this is what we want to speak about Prakash Industries. Couple of reasons, especially the promoter issuing warrants to themselves and a strong guidance makes it to stock scoop.